Welcome back to Fast Money. Shares of AutoNation topping the tape and surging to an all-time high today. So what's driving this stock higher? Let's bring in auto analyst Michael Ward with the Benchmark Company. Michael, great to have you with us. I want to first deal with today's surge. Was there anything behind this?
Well, I think there were two things. I did hear that one of the big brokerage firms had a positive report out there, but also the news from Walmart and Home Depot is certainly good news on the consumer side.
At the same time, Michael, what's interesting to me in the notes is that you say that the consumer, I mean, it sounds like you think investors have got the story wrong, that if there's trouble for the consumer, it means trouble for AutoNation, and that's not necessarily true.
Well, I think the market's got two things wrong. I think they have it wrong on the entire auto sector. You know, basically the position that it's in relative to other downturns. The auto industry should outperform the rest of the global economy over the next 12 to 18 months. I mean, third quarter alone, production will be up 30%. And specific to the dealers and specific to AutoNation, I think they have it completely wrong, because historically, less than 10% of expected deliveries over the next 6 months would be backed by a consumer order. Now it's over 70%. And so really over the next 6 to 12 months, to me, it's almost indifferent what the consumer does.
So over the next 6 to 12 months or so, you think that sales are pretty much secure just because inventory is so low? The demand is so high. There's not enough.
There are enough orders out there, and so every vehicle that's being delivered to a dealer is being delivered to a consumer. And so as a result, unless you saw a big wave of increase in cancellations or those sorts of things, yes, sales will still be strong. But we haven't seen any evidence yet of cancellations. If anything, the order book is getting stronger.
How much, I mean, when will we see sort of those cancellations? I'm just trying to figure out how sensitive an auto dealer or maybe an automaker is to a softening consumer. Maybe things are good right now and inventories are tight, et cetera. But at some point down the line, when unemployment ticks higher, people start losing their jobs or dealing with a lot of other costs. They may not want that car. There may be no reason for them to have that car anymore.
Yeah, in certain regions that could be a case. But right now, I've been following the auto sector for 40 years. And this is the most bullish I've seen the underlying demographic trends for vehicle demand in that entire 40-year period. The vehicle fleet right now is the oldest it's ever been. It's over 12 years of age. And over the last 5 years, you've had the biggest increase in licensed drivers since the 70s. So vehicle demand is going to become even stronger over the next 5 years than it's been the last 5 years. And one other, driving point on that is the millennials. People aren't paying attention to demographics. The prime age for home and vehicle ownership is the 40 to 45 age group. And millennials, which is a bigger wave of the baby boomers, the oldest ones turn 40 in 2021. So we have a big wave ahead of us.
Talk to us about the used car dynamic here. I read that 90% of their used car inventory was self-sourced, and that gives them some sort of big advantage, either by lease, trade-ins, we buy your car, that sort of thing. Are we still in an environment where that used car inventory is still really important?
It's vital. And, most people trade their car in when they're getting a new one. And that's about 80% of demand is, people are trading in their vehicles. And so what AutoNation is able to do is they can self-source those used vehicles, so they're not forced to go out and pay the premium prices. It's part of the overall transaction. And so they can determine which vehicles they want to keep or which vehicles they want to sell back to the auction markets. And so that is a very important dynamic to follow. Companies like Carvana have to go out and self-source that inventory, where the customers are coming into the AutoNation showroom as part of the trade-in and as part of the total overall equation.
Michael, great to get your take. Thank you.
Thank you very much.
Michael Ward of the Benchmark Company. He's got a 185 price target on AutoNation. That's about $50 of upside from here. Tim, what do you think of this one?
I like it. My exposure in the auto space is, first of all, agreeing with all the trends he's talking about in terms of supply-demand dynamics and where we are with some of the overall demographics and where we are with vehicle life, et cetera, puts me straight into the OEMs. I'd rather own Ford or GM. And to me, I think I look at the business in Ford and I look at the gross margin improvement of this business, and they're obsessed by cost control. And that's something that in the auto sector is something I don't think we've given them credit for. So agree that I think that the auto sector demand trends are more insulated in this environment because of demand, even though affordability factors, I think, look, pricing in auto for Ford, we heard this last quarter, they're raising prices dramatically, and so far it's working.
The demographic aspect is really interesting in terms of the uptick in licensed drivers, in terms of the millennials being a bigger wave coming than baby boomers. I mean, that's tremendous.
Yeah, the millennials are actually a larger generation already than baby boomers. And I think that that same idea goes into housing, right? Where right now what we're seeing with cars is there's this pent-up demand that now people are still trying to get all their cars. And that's why we're trading down for things like Walmart so that we can get our cars, which we've been pushing off. And I think that's probably going to happen with housing, right? Is housing is slowing down, but we're just pushing that issue down the line. There's a huge generation that's coming. They're all starting families. They need cars. They need houses. And I think that's going to be a trend over the longer term that's only pushing it down the line.
Bonawyn?
Yeah, there's no arguing against the demographic shift and also the supply-demand dynamics. If I had one bone to pick, and I'm super splitting hairs here, it would be the consumer finance acquisition that they recently made. I would assume that going into where we are in terms of the economy and where we are with the consumer, you might see some charge-offs related to that, and you might see some margin of safety kind of erosion there. But other than that, I think it makes a very compelling argument.